Hey everybody, it's Mark Yagi. Welcome back to this channel, and I'm giving you an update on a Tesla trade we did about a month ago, and I talked to you about how I make 4% a month, as that's what we target anyway. It doesn't always work out, but in this particular situation, a stock called Tesla, you might have heard of it. It worked out great. The stock just expired. It's Friday afternoon. It's 4:27. And the stock is done. It's taken away. And so, at least tomorrow morning it will be. So right now the stock did exactly what we thought it would do. We'd make about 4% for the month, and we're pretty happy with it. Now, I just want to kind of walk you through what the math is. And I also want to debunk some of the other people that are chiming in on that trade. There's been a lot of chatter on the trade. And some people are like, I don't understand why you're so deep. Well, I'm going to explain exactly to you why we're so deep in this video. So stay tuned. All right, welcome back. Here we are, and we bought this Tesla. If you go to this video right here, you're going to see that there was a thumbnail that says how I make 4% a month in Tesla. And we basically buy the stock. We do covered calls. So we bought the stock at 190. Now, you know what? Anybody can teach you how to do covered calls. There's a zillion videos out there on YouTube for free that you can go and learn how to do covered calls. But if you want to learn something right, you've got to learn all of the aspects. You have to have a system for it. And we have a system. And part of our system is protection in a down market. And I don't know when you're watching this, but I can tell you right now, we're in a bloody red market where the market's just getting hammered because of what the Fed is doing. It doesn't really matter why. But if you're not playing any defense, you're getting hammered too. And so we bought the stock at 190 when Tesla was at 190, and it went up and it went down and it went all around, right? And as long as the stock stayed above 165, because we sold the 165 strike price calls that expired a month from them. Here's a screenshot of when we did that trade. So we bought the stock for 190. We sold the Tesla March 10th calls, which is today, 33 days out, for 165. We got 31.75 for that. Now, a bunch of that was what they call in the money amount, and a bunch of it was what we call juice, like about $6.75, something like that. It says 634 on the screen, you know, whatever. I remember like 634, but it actually, the math works out that we got a little bit more when we sold the call. The bottom line is our basis on this was 158.25. And so the ROI is 4% on that. When you do 634 divided by 158.25, you get about 4%. If you annualize it at 190 or anything above 165, you know, that's 12 times you get in a year. And so that's a 48% return in a year. I'm not saying that we're going to get 48% return. I'm not going to say we're going to do the same trade every month. In fact, we just let the trade expire because we're in a red market. And that's part of our system. You know, when the market goes red, we don't need to be out there buying stuff. We can wait until it bases and starts to go back up and we feel the momentum going the other way. Part of our system is to get the probabilities on our side. There's no reason to always be trying to buy stuff if the market's against you. It's like we want the tailwinds behind us. Anyway, so we bought the stock for 190. We sold the Tesla March 10th calls for the 165 strike for 31.75. That was a 33-day trade, and we were in it for 158.25. Let me show you this little graph here. This little graph shows where the stock just closed. It just closed at 173.60 on Friday afternoon, March 10th. Okay, so here we are, March 10th. The stock is 173.60. So tomorrow morning, when the brokerage firm does their business, we're in the money by about $8.60. We're going to get exercised out of our trade. Now, we could have rolled our calls to next week or next month, which is normally what we do. But on this particular trade, the market turned red right here this week. And you can see the stock for the last 5 or 6 days has been in a downtrend. So we're just like happy to get out of it. And the stock stayed above 165. So we made our money. I know I'm talking fast if you haven't done this before, but you can always watch the video again. I want to get some good information out to you. So now let's take a look at it. If we had just bought the stock at 190 and we got 31.75 for the strike, we'd be in it for 158.25. Period. End of story. The stock closed at 173.60. So I'm showing you the screen here that the call is going to be in the money by about $8.60. So we owe that amount. okay, to the brokerage firm. So, we lose $8.60 because it's higher than the strike by $8.60. That's okay because our stock price is now at 173.6, also higher by 860 than the 165. So those two offset, leaving us with the amount of juice that we got when we sold the call, which was $6.75. Yay, pretty good, right? The trade worked exactly like we wanted it to, and it was a month, and it's 4% in a month. I don't know about you, but I think 4% in a month is pretty good. And what we did is we sold the deep in the money calls, and we had a better chance of making that money. Now, we got a little bit less juice. We only got $6.75, deep enough to protect ourselves in a down market, which is exactly what ended up happening. And so that's how we made our money. Now, I'm getting some chiming in on people that just don't understand this. You know what? I've been teaching this for a long, long time, and I've had people that just can't get their brain around why we go deep in the money. And we don't always go deep in the money, but on this trade we did, and it worked out. So the math doesn't lie. But one of these people is always like, well, you should be selling out of the money. And I get that all the time. That's cool. That's why they're called options, because there's a lot of choices, right? You could sell at the money, out of the money. We choose to sell on this trade. We choose to sell, $25 in the money, the 165s. And so what would have happened though, when the stock was at 190, instead of doing the 165s, we did an out of the money trade, which is what a lot of people think that they should do. And that's great. You can do them. But again, whatever you do, have a system, guys. I don't want you to lose money. Just have a system that you can rely on. Our system says when the market's not favorable, you sell in the money. This person says, oh, you always sell out of the money. Okay, that's great. Well, let me show you what happened to this person's account if they did a 195 trade, which was just $5 out of the money. So Tesla has some 195s out there, and the 195s are obviously out of the money. When the stock is at 190 and the strike price is at 195, it's out of the money. So it's got some room to run up. So if it runs up, it makes that extra $5. That's great if the stock is going up. But if the stock doesn't go up, you don't get any of that, right? You just get the time premium that you get. Now, the time premium was about $13.60 about a month ago. And so you can look at that and say, all right, I'm going to buy the stock and I'm going to sell the 195s for $13.60. That gets your basis to 176.40. And then, now we fast forward to today and the stock price is 173.60. Well, you're not going to get anything for the call because it's out of the money and there's no more time premium left. So that really costs you nothing to buy it back. And then so you'll buy it back for nothing. And so essentially it's 173.60 is now what your account is worth, right? That's a net loss of 280. So instead of going in the money and having that cushion, now you're just out there kind of flapping in the breeze and you have a net loss of 280. Now, if the stock had gone up, you'd have made the $5 plus the 13.60, but it didn't work out that way. The stock was in a downtrend and we happened to catch a bad market. And so therefore, if you're doing the 195s, you didn't get any help from yourself when you sold the calls. So I don't know about you. Let me just ask you the question. Would you rather have made $6.75 on the trade or 4%, or would you rather have lost $2.80? Well, there's no right answer. I'm not going to answer the question. I think you know the answer. But if you're playing defense wins championships, right? Like they say in sports. If you're playing defense, then you get a bit of a cushion. Yeah, you make a little bit less, but you get a little bit of a cushion. If you want to play offense, you want to shoot for the stars, great. But I really recommend you have the market going in your direction. When the market's kind of moving against you, it's really tough. And even when the market's kind of moving sideways, it's good to have a bit of cushion. Make a little bit less. Hey, look, if you make 1% a week or 4% a month, that's like 48, 50% a year. I mean, that's a lot. I'm not saying you're going to do that every month or every quarter or every year or every week, but you're going to make some good money. We just proved to you that, if you go deep enough, you make the money. You make 4%. If you try to be a gunslinger and, try to make money on the upside, play a little bit of offense when the market's not perfect for you, well, you might have made it, but on the other hand, you might have given up some. And I'd rather play a little defense and be conservative in my old age. Maybe that's what it is. I want to be conservative. Listen, I could show you tons of really cool charts of how if you make 1% a week, you'll end up making more money than you can even imagine. So here's the numbers real quick that I have in my mind. If you take $100,000 and you make 4% a month, just like we showed you on Tesla, right? That turns out to be about 48% a year. By the way, we had a higher probability of making our 4% because we cushioned it by going all the way down to 165. When it's right at 190, you only have a 50% chance of making money because the stock could go up or it could go down. But if it's deeper in the money, you've got a higher probability of making that money. So I'd rather have a higher probability of making less than a lower probability of making more. It's just my preference. I'm not saying the other answer is wrong. I'm just saying that's my preference. But you take $100,000, you make 4% a month, right? That $100,000 turns into like $11 million in 10 years, okay? All right, cut it in half. I mean, I do this number all the time, right? Cut it in half. It's not 11 million, it's 5 million. All right, if that's still, ridiculous, and maybe it is, cut it in half again, okay? And so now you're only making a quarter of what we thought we're making. You're only making a quarter of a percent a week, or you're only making 2% in a month. That's still pretty darn good, or maybe 1% in a month. Hey, that's pretty darn good, and it still compounds really well. So look, my point is to show you, look, we put a trade out there, right? We showed you what we planned to do. We sold deep in the money. We did exactly what we planned to do, and it worked out really well. And you can do the same thing. Now, if you're going to do the same thing, you can go out there, like I said before, and you can just, do any covered call method you want. You can buy the stock and you sell the call. But what happens when the market goes against you? What happens when the stock goes against you? What happens when, there's an earnings date or a dividend date? What happens when the stock has a fundamental shift? There's lots of things that you need to do. And there are times that you need to adjust your trade. We call them trade adjustments. And then what happens when you want to actually leverage your account a little bit and get a little bit more money, more juice, if you will, by trying a different strategy? There's lots of different ways that we go deep on our system. And I'm not saying that you should have our system. I'm just saying you should have a system, right? Buy somebody's system, invest in somebody's system, learn somebody's thing, because otherwise you're just like everybody else that sells covered calls, and it's a great strategy, but why don't you just learn how to do it right, right? So get somebody's system, get somebody's education, and learn how to do it right. By the way, if you like what we're doing here, I've been doing this for a long time, and I enjoy making videos, but I also like a couple of attaboys along the way, like, hey, is there anybody out there listening? So, I'll keep making videos. Give me a like, give me a subscribe. There's a lot of people that watch this channel that are not subscribing. It helps the algorithm an awful lot if you subscribe. If you hit the notification bell, you get these as soon as they pop out. It's Friday afternoon. I'm trying to get this thing frantically out as soon as I can. My team might be gone for the day anyway, but we'll get it out as soon as we can. And that's what I want to keep doing, so you get notification as soon as it happens. And so I sure love your support, and I thank you for your support if you're already subscribing. And if you're watching this far, hey, you're probably supporting, so that's really cool, and I'll just keep making these videos for you. But, if you have a subject that you want me to cover, put it in the comments. A couple of people put some things in the comments. I'm going to be making those videos. It's coming up soon, things about tips and strategies. I want you to see that video too. So listen, I appreciate your being here. I want you to learn how to do the strategy. This is, to me, the best kept secret on Wall Street. And to me, this gives you an edge. And you need an edge when you're going against the big money institutions. They've got billions of dollars to throw around, and they push us out of the way. They push us little people out of the way, right? And so if we can learn how to read their tea leaves, if we can learn how to get our edge, and our edge is creating the juice from selling the calls in the market using a system and doing it systematically and moving it every week or every month, trying to collect our 2 to 4% a month, that's our edge. If we can just do that, we're going to get way ahead of what the big money is doing, right? And we're not going to let them push us around. And so that's why I want to help so many people do this, because I really believe after 47 years of being in the market that this is like the coolest thing, that this is like the holy grail of investing. And so if you can harness this holy grail of investing for yourself, then I believe you're going to be better off. I'm not saying you're going to make $11 million, right? But you're going to make a lot, especially if you're really disciplined, if you choose the right stock, in the right market, at the right spot on the chart, and then you squeeze the juice the right way. And part of the way we do it is we sell deep in the money in this particular situation, and sometimes we sell at the money. So we do different things for different markets. And there's lots of different ways to skin the cat in the options game. Hey, listen, enough from me. I sure thank you for being here, and I'll see you on the next video that I make. Take care. Bye. Hi, Mark Yegi here, wealth architect and creator of the Cash Flow Machine investing system. Listen, what you just saw is just one part of my system for creating reliable income of 2 to 4% a month from the stock market. But you know that if it were that easy, everybody would do it, right? So if you want to learn how to create investment income the right way, then you need to learn and have a system with rules and what-if strategies so that you can learn what to do when the market goes against you, what to do when the stock goes against you, how to adjust your trade so that it's always in a winning position, how much to risk, how to build a multi-million-dollar portfolio that creates income of $10,000, $20,000, or $30,000 a month in semi-passive income. Best of all, the whole Cash Flow Machine system takes less than an hour a week to implement. Just go to the link below to learn more about our system or go to cashflowmachine.io. See you there.